Let's take a look here. Good afternoon, everybody. Today is Wednesday, the 9th of March, 2011, and let's take a look at these markets here. The S&P 500, we remain above this uptrend line, obviously, that we've had and that we've been looking at. We keep testing it, and realistically, we're in this range. You know, the top end of the range about 133.65, 133.70, and the low end of the range near about 130 even. That's also where we find the rising 50-day moving average. You can make a case in either direction here right now. The primary trend is higher, so we generally want to give the benefit of the doubt to the buyers. But you look at the action in the semiconductors, which broke their trend line and finally succumbed to some profit taking in there after getting an upgrade. I think it was on this day last week, and I sent out a tweet saying they're getting an upgrade now. It seemed a little bit fishy, but anyways, the semiconductors have led this market on the way up. We have to be aware of that that when we're losing a group that led this market higher, it doesn't necessarily mean the market will decline from here, but it's definitely a warning sign. You can make the case, though, again, that because the primary trend is higher, that odds would favor a breakout. There's been a lot of talk about this triangle pattern here, and you can look at it and say, well, this is this triangle pattern. We've also got a little bit of a secondary trend line right in here from about the last 4 or 5 days, and that breaking in either direction is typically going to lead to to a movement in either direction. The scenarios I could see happening here are that we continue to just frustrate people within this range. Really, this is the more important level, 133.60. I don't view this trend line as a big deal if we break it. We might just end up breaking it through time. We might just continue to chop about within this range, and one of those trend lines will be broken. We'll suck some shorts in below it, or suck shorts longs in above it, and maybe not go anywhere. Or it could lead to that big rally if we break the trend line. I think, though, that really we really need to see this 133.60, 133.70 level broken with some volume too before we can trust in this market. You look at some of the areas of strength. The Russell 2000 continues to hold up well, but still below that $83 level. If it can break 83 and hold above $83 a share, then I think we're going to see the rest of this market begin to follow it higher. When we're looking at this time frame right here, which is 30 minutes, I've got basically a 5, 10, and 20-day moving average. We're holding that 5-day moving average, which really hasn't been much help to us, and I think I said that over the weekend, that the 5-day moving average, I typically look at it as something very important in the intermediate term, but when the market turns choppy sideways like this, it kind of loses its significance. In this range in the Russell 2000, obviously 83 on the upside and about 79.50 down at the low end of the range. So we're range bound, and if you're trying to force trades in this environment, generally you're going to end up getting frustrated. A lot of breakouts aren't following through. Some of the littler names are, but we're also seeing big damage in some of the leading names. We saw, of course, FSNR today, or FNSR. Let me do that again. FNSR got smushed here today, and why isn't it? And this stock was in a real nice uptrend. It really wasn't showing any signs of weakness prior to this. But when you have a stock that's extended, as this one is, and just extended, I mean, basically up a lot. I mean, it's up from a low of $2.50 or $2 a share up to 45, up 2,500%. You got to be aware when those earnings come out, and at least hedge yourself, and be aware that these things can happen, and the stocks don't always recover quickly. Hewlett Packard, we had Akamai just continues to bleed lower. What are some of these other ones? Cree continues to be you get a little bounce in there, but these stocks are broken basically, and they're going to need time to heal. And the fact that we're seeing more stocks implode like this tells me that we're in a riskier, in a heightened sense state of risk, and that should be obvious. That's the message the market's been telling us basically. If we just take these lines off, we've been going sideways in here. It's similar to what we saw back in November of last year. Now, are we going to see another push higher, or is this going to be distribution that leads to a decline? Well, with a rising 50-day moving average, generally it means that we're going to see a recovery, but because we've expended so much energy getting to where we are, we have to be aware that the risks are greater for a pullback. So what does that all add up to? It adds up to a bunch of indecision here, and that's really the environment that we're in. It's a very indecisive environment, and I think that it's best to kind of just really be very choosy about your trades. Keep your share size smaller than what you would normally look at. There's encouraging signs as well. It looked like I told subscribers the other night that these retailers are starting to look like they're getting down to important levels where they could break down, but we weren't getting short, but we're aware that maybe if these things break, it's going to lead to an erosion of confidence in other areas of the market as well. They recovered nicely. We also spoke about the home builder index, which the home builder index was getting down towards basically the equivalent of 1620 for the financials, which we'll look at again. But they were looking pretty weak, and what did we have happen in the home builders? We had a very nice recovery in here. If you look at the 30-minute time frame, we broke above this little range that they've been in. We did not break the support. So until we break support, there's no reason to get involved to the short side. You can look at the NASDAQ, and the NASDAQ in here is definitely weaker than the S&P 500. You can see it's been testing this 50-day moving average. This is really the trend line that represents the essence of trend, which comes in right at the 50-day moving average. We've had resistance up at the 58.30-ish area and support down near about 56.5. So if we break that, then maybe the NASDAQ could be heading for a test of, well, at least the Egypt lows right near 55.5, and perhaps down towards the highs, the resistance from late last year, near closer to 55. If you look at for instance, 30-minute time frame, even a 10-minute time frame, we can see in here that we've got this support in here, and this support in the NASDAQ is at about $56.70. Well, you could make a case too that we've got this pattern forming in here right now, which is a head and shoulders pattern on the 10-minute time frame that goes back, about 2 weeks, I guess. So is a 2-week head and shoulders pattern. If it breaks below, and holds below for at least a half hour or so, I'd say below 56.60, then I think we're probably going to see a deeper pullback down towards at least the Egypt low. So that's, the NASDAQ might be a little bit clearer and might be, something to keep a closer eye on because, again, the semiconductors led this market higher and they're much more heavily weighted into the NASDAQ than they are the SPY. So if we start to lose support in the NASDAQ first, well, then that could spill over to the to the S&P 500 and the Russell 2000, which is still more range bound of these markets. The bigger level down there, probably 80 and a quarter, and again, range bound. So we can take a look at some of the stocks. Some of the stocks I was mentioning for subscribers. We had an open position in this VTG. This thing's just a complete waste of time, is my opinion. It's this little $2 stock that refuses to go. It wore me out. I got out of a good chunk on that rally and then held some because I believed in the story, which is stupid, of course. But anyways, it needs to clear 226. Lazy Boy, we spoke about that one. It's still not giving us a reason to buy the stock yet, and this is a good one to keep an eye on and learn a lesson in patience from. That is, we've been looking at this saying, Well, the resistance typically will act as, so, first of all, we didn't want to buy it at the rising 10-day moving average because it didn't give us a reason on the intraday time frame to buy there. We didn't want to buy it at the 20-day moving average because it didn't give us a reason on the intraday time frame. Even though you can look at it and say, well, resistance becomes support, and we've got a rising 20-day moving average that it seems to be finding support at. What we want to wait for is we want to look at this. Let's just look at the 10-minute time frame. We can see that we had today what looks like the higher low, and now we've got, really this has been probably up near, I think they're probably getting above 980. We would see some momentum develop in the stock. We have a higher low now, so 940 would be a logical place to put a stop, or if you wanted to give it a little bit more room, you could use the low of this recent move, which is down at about 920, let's just say. But I think you want to see some strength and watch that momentum to develop before you would get involved. And that 980 level, 980, 985, seems like a place where the momentum should come back into this name. And then you set your stop and see what the market gives you. AVL was one of these rare earth plays that we were keeping an eye on because it's been the stronger of them. But it started breaking down in here a little bit. And I think this group in general, MCP is reporting after the close, and they may have already. We'll check in a moment. But the group itself, for instance, broke some support. That support became resistance. It's breaking down. SHZ never recovered from that secondary. They broke support. That support became resistance and really got smacked in here today. I did buy some puts in MCP today. Complete speculative. And I could be out all my money. We'll see. And it's gapping up to $50 a share. So far, it looks like I'm going to lose my money on this play. But MCP right now trading at 50 and a half, and so we're still, it still doesn't look bullish to me. It doesn't look bearish yet either. So a bet on earnings is just that, a bet on earnings. And sometimes you make these bets and they work great. Other times it looks like this one probably won't be a good one for me. But I was looking at it as a risk-reward, thinking that, if I don't risk very much money in here and, based on the action in the rest of the group, we could have a disaster on our hands. And anyways, I'll have to take a look at that later. But, there's a lot of hype surrounding those rare earths, and I guess with good reason. But, when you see the rest of the group breaking down like that, you take a look. CTXS is a stock that's up near all-time highs. You take a look at this. I should actually, it's not all-time highs, but basically decade highs. We take a look back here. Let's just draw a horizontal line on there to kind of frame it. 2000, obviously, it's hasn't recovered from that, but it's up at these highs, and it's kind of a stock like FNSR. If earnings come out on this thing, it could be a disaster down at $55 a share. But at the same time, when you look at the shorter term time frames, it's a little bit choppy here, but it's up near these highs. So this is a good one, I think, to keep an eye on for continued strength if we get the bullish resolution in this market that this is the type of stock that ought to do well. EBIX ought to do well. It trades, what is this, average daily volume about 733,000 shares a day. We've also got, you look at a stock like Google. Google looks like it's breaking support. If this thing gets back above $600 a share, though, you're probably going to squeeze the shorts pretty good in there. NTES, I think this one continues to hold up real well. And if this one can break maybe these highs, well, let me try that again. These highs right near about 47.30, that NTES could have another leg higher, so I'd keep an eye on that one. On the downside, Velasys continues to look weak. Especially if it breaks these lows of the last week and a half or so. You take it, back it up to the weekly time frame. It's looking like it's in a clear stage 4 downtrend, and more downside looks likely for a stock like VCI. But at the same time, some of these stocks, the ones that look like shorts, Campbell Soups was a good example. CPB, it never broke the support. We were looking to get short below $33.35. It never broke that support, and what happened? Well, the shorts got squeezed in there. Another decent, a couple decent looking charts are WCG. This is WellCare Health, and on the weekly time frame, you can see that it's at an important level right here, or getting close to what has been an important level. My PC is really slow here. I think it's being dragged down by some program. But anyways, pushing past here, the stock holds up really well, and this could be one that could move higher. So this is the type of stock you want to buy on strength, as is Ralph Lauren, RL holding up at these highs like this. Nice tight consolidation, and maybe breaking these highs, it could get going. One other stock I wanted to mention was NVDA. I wanted to mention that because over the weekend I had posted a chart. I think I posted this Sunday saying I'm watching this stock because it looks similar to DEC did over in here. Now, if you look at this, DEC. So in DEC we had this massive uptrend. It turned sideways, and then it broke the 50-day moving average. The 50-day moving average was still advancing. Well, if we take a look at where we are in NVDA, we had this massive uptrend. It broke the 50-day moving average. The 50-day moving average is still advancing. So we look at that and say, okay, we've got these similar-looking patterns, but we don't want to buy into weakness here. And what I said is this is on watch for potential upside. Well, obviously we don't have any upside yet, so there's no reason to be involved on the long side. If we take a look at what happened in DEC, you see that it rallied up to this prior resistance, this prior support in that 10-day moving average, and then when it broke here, this is where it really got going higher. So taking a look at, for instance, a 30-minute time frame, maybe we should take a look at a 60-minute time frame to back it up a little bit further. This was that area over here. So first it got back above that 5-day moving average. It found support at the resistance at the prior support, and then the second push up through that level, that's when the momentum really began. So I hope no one got involved in that trade, because NVDA, you can see, is still clearly below even the 5-day moving average. So we've got a lot of work to be done in NVDA, and the longer it takes to turn itself around, in my mind, the less likely that it would occur. So be careful with this stock. Don't be a buyer of it. It's not, you can start throwing Fibonacci's on there and saying, well, here's where it ought to find support or whatever. But that's not what you want to look at, I don't think. Not yet. Let's take a look at Darren, thanks for the retweet. Fibline, thank you as well. Are you doing the show, Johnny Utah? I'm on, buddy. Snoopy's long AGU. Let's take a look at AGU and see why the big guy is long AGU. Let's see, it says, I'm long AGU, but it looks like it ate its own product and died. What's your read? I don't know. Looks kind of neutral to me. I mean, I think that with the rising 50-day moving average, you still give it the benefit of the doubt, but it's starting to turn more neutral, and maybe this is the the first lower high. It's going to need to push up through there, obviously, to get any renewed momentum. It doesn't look, it doesn't look bad. I mean, the weekly chart's still in a nice uptrend. Depends on, you look at the weekly chart. Here's the most important, here's the higher low on the weekly chart. If this is a low or high, it doesn't, break the trend for a bit. But, maybe becoming a little bit more neutral, but I don't see it as a negative thing here. Let's take a look at what's a good entry point for going long on F. I thought it was SF. Let's take a look at Ford. Ford has not really, Ford is you could kind of look at Ford the same as NVIDIA. You could look at Ford the same as DEC a little bit. What's a good entry point? Well, I don't think you want to buy it on weakness. It's showing lower highs and lower lows here. We've got a declining 10, 20, and 50-day moving average. So I think that Ford is in a downtrend on the daily time frame. If you look at the weekly, maybe it's going to try to find some support here, and it looks like it's trying to find support at that 200-day moving average. So I think the stock needs to heal a little bit through time, and it needs to heal itself. And you know, and the autos, just you know, look at General Motors. General Motors broke its IPO price, and you know, continues to, you know, the money's not flowing. Money's flowing out of the auto companies. So I don't think there's a good clear entry yet. You have to be patient, let it bleed out, let the momentum kind of shift to more neutral, and then as it begins to turn positive. I don't think it, you know, my style isn't to try to pick the bottom, but instead to participate in some upward momentum, and that upward momentum just isn't there anymore. So anyway, that'll wrap it up, I guess. That was just about 11 minutes ago, and Snoopy's telling me he doesn't see the TV. So I don't know if this thing broadcast. If not, I think it's being recorded, and you can see it on my at alphatrends.net shortly. Thanks.